Good morning, I'm Chris Swift. Welcome to Market Day Report. We have tremendous amount of headline news that is impacting our commodity markets here recently, and the big market that is impacting the most is crude oil. So let's take a look this morning and start off with that and see where we're going this morning with some of our energy prices. And a little bit mixed this morning. July up 22. July goes off the board here pretty quick, so August is fixing to be spot month. 73.49 down a tick. September down 12, 71.64. And the October, 70.10, down 22. Note the inverted carry there. Each contract month at the front end is just a little bit higher than the back end to be able to keep, it shows demand for that. Here's what's in a big mover right here. This is diesel fuel. Diesel fuel is up 33% from May the 30th, with gasoline only up 19% on there. And the biggest reason for that is we know that diesel fuel is our manufacturing, production, and unfortunately a war material, where gasoline tends to be with the consumer. So let's see how it impacted the grains. And we know that the corn market's up just a little bit this morning, a penny on the July, 434.5, and it goes off the board too here pretty quick. First notice day, I think, is Monday. September up 1 3/4 at 430 3/4. That Dees contract, new crop, 446 even, up 2. Soybean market has been really friendly, and it still is. The August contract up 4 at 1080 3/4. Novi beans 1072.5 up 4 1/4, knowing that both the red November is higher as well, and bean oil higher again this morning too. The bean oil is really beneficial from the new mandate, the increased mandate. Wheat down 4, 4.5. That's kind of interesting with some of the rains that are coming in. And let's see what hard red Kansas City, down just a little bit as well, down 3 3/4 on the SEP, 582 3/4. Dees down 3 3/4, 604 3/4. Let's ask Brian Hoops to step in here with us. Brian is from Midwest Market Solutions. Brian, tell us what's going on in the wheat market this morning.
Hey, good morning, Chris. Always good to see you and talk with you. So export sales out this morning, they were pretty decent. In fact, better than expected for corn. Soybeans was a 9-week high. Wheat sales were all decent. So getting a little bit of help from the export numbers. A private sale of corn this morning, 124,000 metric tons sold this morning. So again, exports are decent, and for this time of year, especially when you're looking at big harvesting being done in Safrina, that corn crop's starting to hit the marketplace. So we can see a decent number of corn or even some private sales. That's really beneficial for this market. Wheat Plains is going to be very hot this week and this weekend. Now, that's really going to be good for their crops as far as the wheat goes. Ripening that head, getting it ready for harvest. We're a couple weeks behind normal harvest pace, and that's added some premium into the wheat futures. But this hot weather, exactly what is needed. That'll help the harvest ramp up. And once we can get that harvest going, then we can start talking about double crop soybeans behind it. The U.S., for the most part, looks to be pretty well watered after this weekend, maybe starting Tuesday or so. Good rains across Nebraska, almost all of Iowa, southern Minnesota into Illinois. So there's going to be a good chunk of the Corn Belt that's been somewhat dry, looks to receive some really ample rainfall next week. So we're here, putting in a little premium because of the war, because of EPA mandates, decent export sales. But then in the big picture, you have July grains going off the board today, or grain options going off the board today. First notice day a week from today, and then you have that all-important stocks and acreage report coming out on June the 30th.
Wow, that's a lot on the plate. Brian, stick around. We're going to go away, take a real quick commercial break. We'll come back and talk livestock with Brian Hoops. Stay with us. Welcome back. We know we didn't have any trading yesterday, so what we're going to take a look at is Wednesday's closes here in the livestock market, and they were a little bit better in the fat cattle market. We know that we're going to probably trade cash this week. Some is going to be bought with some time on it. It's going to be very interesting to see how we come up with this, but right now we got the June contract up $1.10, 224.35. Cash has been trading anywhere from 235 to 245. Probably the biggest news out there is the boxed beef. Right at $390. I think it's $390, really coming close to $400 on that. That is making for some very uncomfortable consumers at the grocery store. August up 112 at 211.77, and Ock Fat's up 77 at 209.32. See what the feeder market was doing. That feeder cattle index is currently trading at 311.04. That's what it closed at. So you've got a positive basis right now in the feeder cattle market, something that has plagued the fat cattle market for quite a while. Now it seems to be creeping into the feeders. August was up 70, 304.05. September up 70, 303.60, all the way out to Jan, 293.67. So cattle feeders are probably going to be looking at that discount out there just as much as what backgrounders are going to be looking at the premiums on the front end there. Hog market was a little bit higher. Hog market has been screaming. That lean hog index is up around 104.25 now. The August contract at 112, up 20, all the way out to D's at 86.12. That's a pretty big basis spread right there. Let's get Brian Hoos back in again, talk a little bit about this. Brian, I got one question before we go into the livestock. So you mentioned the double crop beans. What's the latest that they could put that second crop in?
Well, you have a longer growing season in the Southern Plains, so I think you can plant after the 4th of July and still expect a decent soybean crop. I'd have to check to see what insurance dates you're looking at, but I think that, there's plenty of time yet to get that crop in the ground. It's just a matter of getting the wheat harvested, get the ground prepared. I've seen a little bit of that being done here in the last couple of days, as that wheat being harvested, ground being prepared, soybeans ready to be seeded right afterwards. But of course, they'll need some moisture soon after that. Let's talk about that livestock market. You talked about box beef pushing sharply higher. That has really helped the packer margins. They've gone from around $140 to $150 in the red to about negative $30 now, because the cash came down this week on a dress basis, about $4 softer, in live basis in the north, $5 to $6 softer, and yet the cutout values continue to march higher. So that's helping those packer margins improve a great deal. Futures, I think, probably open a little softer here this morning. We still have those concerns, and you kind of alluded to it, Chris, where we're getting into the 4th of July holiday and the demand for that. And once we get past that holiday, there isn't a lot of demand for beef into the end of the summer grilling season. Everyone's kind of bought what they want for the summer, for the grilling season. And you get these high prices to deal with. You get to concerns about inflation, maybe gas prices moving higher based on the conflict with Israel and Iran. So it does put a pinch on the consumers' pocketbooks, and that's the thing that I think really could tip this cattle market over, is consumers' lack of demand, if that in fact does happen, because prices, at these levels, they're certainly high enough that consumers may start to shy away.
Well, it sure does make it more difficult to have to contend with, because these are outside market forces and not necessarily related to the supply and demand of just cattle. Brian, really do appreciate you taking the time to be with us on this Friday morning. Hope you have a great weekend.
You too.
And Suzanne, good morning to you.
Good morning, Chris. Always great to have you here. And that was an interesting question, too. We're talking about making sure that once that wheat is out, soybeans are going in. What's that deadline on that?
Yeah, we're 4.5 million acres shy. We were already seeing new crop red November beans start really making some advances. And what we're looking at is the industry's going to bid for acres. We're going to try to buy acres to get more soybean production up.
Our producers can do it if it can be done, for sure. Thank you, Chris.